that we have on set with us, of course, economist Gavin Sanga, to be able to dissect issues to do with this particular statement that has been issued by the Office of the Secretary to the Treasury. You do well to take note. So, requirements for money lenders' licenses. This serves to remind individuals and companies conducting money lenders' businesses that they are required under the Money Lenders Act to acquire a money lending license in accordance with Money Lenders Act Cap 398. Be warned that operating a money lending business without a valid money lender's license is an offense under the laws of Zambia. In this regard, money lenders are requested to acquire or renew their money lending license issued by the Office of the Accountant General, Ministry of Finance and National Planning. So these are the requirements that you must have if you're going to have a money lending license. You must have, number one, Pakra Company registration, Zambia Revenue Authority tax certificate, Zambia Police Clearance certificate, as well as money lender certificate issued by the subordinate court, and a sketch map with content details of the business trading area. This is what we want to dive into, issues to do with money lenders' licenses that many people have not even caught wind of. And that is where, of course, Mr. Sanga does come through. It's a pleasure to have you, and good morning.
Thank you so much. My pleasure being here.
Indeed. First and foremost, your reaction to this statement coming through that now those money lenders are going to be able to require a license. First and foremost, your reaction to that before we dive into anything else.
Okay, so the beginning point that this has actually been a case right from 1938, where obviously the Money Lenders Act was enacted, which gave authority to basically operate with a license. But of course, with time, we have not been able to activate what the policy entails to do. And what we have seen so far is that the market is also growing with a lot of needs for loan or credit management system, of which we understand that the market, as we speak right now, it has been fragmented with an aspect of the banking and financial institutions, the upcoming of fintech, technology enabled lending, as well as also Shylocks or maybe loan shark that we can actually be able to speak from there. So overall, in a nutshell, is that we are trying to fine-tune the aspect of money lending, aspect, which should be able to now work with a proper policy channel and make sure that we also remove the unfair treatment that takes place within this space. So it's from that background. So even when the emphasis is coming from the cabinet highlighting what needs to be done, I think it's just a pipe way to give now full authority and mandate to the Bank of Zambia so that it can actually be able to master, plan around what they do within this space, and also bring that prudential, aspect which should be able to interplay into the sector and industry.
How do you think the public are going to receive this statement as well? Because there's been so many restrictions across the board, even those in the central business district, for example. We can talk about there's been a rise for those who are business owners who are renting in the central business district. At one particular point was 600. It went beyond 1,000 as well. So there's been a lot of payments. There are a lot of payments, and you know how tedious it is going to Pakra. It seems everything is going down the Pakra route. Do you think the public are going to quickly adjust?
You see, I think doing the legal way, it's something that is very important for one to actually venture into some formidable business, because if you just do it without any proper framework or any outfit, it becomes difficult for you to work with the regulatory requirements that are coming through. Especially at the point when I mentioned to say this is just a precursor of what needs to be done or what has been happening over time. But what is going to take force here is that you're going to put a proper framework of how this money lending business should be able to function and operate from that perspective. And especially at a point when we are seeing that we have got so many of the credit basket that are also coming on board, with an advent of the aspect of the bank also being left out with some opportunities that are being posed there. So it's important that we just need to see how we can harmonize the credit system, so that we should be able to see how we can build the capital formation that is required to actually help drive aspiration of SME and many other that are looking forward to have that credit access.
Do you also think, before Nami comes in, do you also think that maybe government is also just trying to milk every single sector, or to ensure that it draws money from every single place? Because we can talk about this, the new money lending license. We at one particular point, there were rumors that they were wanting to also begin to tax the church here and there. That did not also materialize, but in other countries, these are conversations that are consistently ongoing as well. Do you think that maybe there are some avenues, there are some blind spots that are able to make money now that government are able to say, I think we can also be able to ensure that we withdraw some money so that we channel it into the circulation of the national treasury?
No, it's not really like that. I think we're at a point where we need to fund our budget up to somewhere like 82%, or using local mobilization strategy. And obviously we understand pretty well that each and every business activity has to contribute into the tax basket. And what you are also trying to see is the situation of policy reforms as well. As I hinted earlier in my preamble, I mentioned to say that this policy of money lenders has been there right from 1938. You can imagine how it has moved. Even when you look at the patterns of practice, both on the borrowers as well as the lenders, I think they have not been able to work on fair deals. Even when you look at the formulation of license framework, I think it's also requires that we need to look at how we can harmonize the aspect of regression, because you see, the bank is operating informally with an aspect of Bank of Zambia supervision. But when you look at the money lending side of the small scale operators, they are on the side of the finance ministry. And again, you look at the requirement, they also have to go through the court and all that. So you find there is this speciality that is taking place there. So my appeal is that because of the disconnect of some sort in the function of some of this policy, that's the reason why we now need to frame up the policy in such a way that it's able to be monitored and regulated by one certain body like the Bank of Zambia to just create that threshold. Even when it comes to the small operators, they must be able to sit under a certain requirement so that they cannot just be moved away from the system. Otherwise, it also affects the other demanding nature of this loan situation. Because you see, in the economy, it's not everyone who's at equal base. There are people that are easily able to access loans from loan Shylocks, where there are few demands and conditions which they meet, and they go about it, and they are able to access, and they work with their demand for capital, and that works out in an equal balance as well. But again, there is also those that are basically looking forward to go the banking way. And again, if you look at the bank as well, it has got tedious process at some point. You can imagine you're looking for money. It takes you 2 weeks for you to access. There are a lot of requirements. You go with this one, they'll tell you to say, come with this element. So in the end, you find that it's frustrative. And what we have also seen that the credit rating system on individual, on companies and many other, they are not given that threshold, rating of some sort. If now, for example, you've got Gongole, which you haven't paid, and then they put you on a default list, there must be a way where even if you are in default, there must be a percentage that you should be able to access some finance somewhere. It's not 100% are going to access because you are in default list somewhere. There must be a way where you can actually
what then can be done to reduce all those nitty-gritties that make you going to the bank to get money a little cumbersome?
You see, the bottom line here is that we need to do a number of key conditions around what is happening in terms of loan management. As I mentioned, we need first to start on the framework of credit rating aspect. The credit bureau system that is happening, it gives you a blanket cover to say this one has been in default, it cannot access not even a small iota of a loan. So that should not be there. What should happen in the case that we must be aware we can do targeting component to say, if I basically get 80% of default risk factor, it means that 20% can also be able to interplay into my next loan contraction. And then in terms of just how we work out with a bank, obviously the bank should be able to do what they call due diligence, where they should be able now to assess, is this person capable of paying back if we give them financial instrument. So those are issues that need to be played from there. And again, the issue of empowering whoever is contracting loans from there, I think it's a component which has not been able to happen. Whenever the banks are dispensing loans, or even just anywhere else, you find that there is no after sales component in terms of trying to give you the capacity to work around with the skill of how you manage the money and all that. So that is not something that is there.
Right. With regards growth, would the money lending license be able to be a spark for the business? We will see business growth and credibility. I do know that borrowers prefer working with licensed entities because you'll be able to feel safe, leading customers to be able to just recommend you to other people as well. So are we going to see a growth in business and credibility?
It all depends. That's the reason why I was even saying that if this comes now down to the Bank of Zambia as the key regulator or sole responsible of all the credit aspect or credit basket in short, it means they should not be able to put more balanced weight on regulatory requirement. Like, for example, anyone who wants to be borrowing or want to be going to this business should be paying about maybe say 25,000 kwacha as a crossover license fee. It will be very basically difficult for one to actually go to that level, because obviously you will be able to be more formal to a point whereby even when it's happened that maybe, for example, you now used to go to Babla because it's operating with that high cost, Babla will work like the bank. So it becomes difficult even to access, and it brings about the issue of defranchising a number of people from accessing credit shapes. Meaning, what will happen in the case now is that the dynamic of a policy will be able now to make more difficult situation when it comes to credit formation. Right. And this actually interplays now with an aspect of having a ripple effect on business expansion and many other that may be able to require to work with the financial resource. So in short, with the regression, there must be a way we can work with the threshold. For example, if you have been interplaying to this business, it means they have to look at maybe say, for example, you've been paying 12,000 quarter for you to have the license. Let it be sustained from there. Then if it's a big company, let it pay 50,000 quarter. If it's a small business, just like that. So there must be a way we can look at the cost structure in terms of fee, other than just having a blanket cover. Otherwise, it becomes difficult, and it's now going to deepen a poverty situation. It's going to deepen the unemployment situation if we go that route, because there are some businesses that basically survive on credit basket.
As you conclude,
yes,
we will also see with regards scalability, where a lot of these licensed money lending businesses now grow into microfinance institutions. We will see them shift to microfinance institutions.
What is going to happen here is that some microfinance or even just banking services now will have a combination of what is happening in both integrated market. Like, for example, we have some markets that now some market players that will be able to use fintech solutions to enable their lending process to be much more easier, meaning innovation is going to be taking place from there. Then we also have certain patterns where, for example, I'm sure you must be able to have witnessed this, where somebody borrows you money and then you end up losing their item. And there are also compound interest, which is not supposed to be the case, because when somebody has borrowed you money, there must not be an element of compound interest, because that's what has been happening, where there is that element, we call it intimidative element. I don't know if you have seen that, where somebody borrows you money, then you get threatened all the time. So that element of putting you in fear mood is not something that's supposed to be there. Then that is business. There must be a way where the two of you should sit down and talk nicely. And if it means paying the interest, you all over your loan, those are issues that need to be put in place. So there must be health discussion in regards to loan contraction, not where there is intimidation and all those sort of things like that. And again, the environment should be created equally. If there are defaults, there must be a way defaults should be counted then for one to do the final action on maybe the possession. But you see, maybe I can even speak even the same situation. There are some small banks or some money lenders who are also corporate in their own way, but even when they tend to go about recovery, their practice is not something that is with the professional aspect. You find that maybe you borrowed from a small bank of some sort. When it comes to following up the recovery, they even involve somebody who wasn't even there. Like, for example, they come home, they don't find you home, then they tell the maid, they start getting things from your house. That is unprofessional. The standard should be actually be able to be put in place in such a way that the requirement must be matching also must be matching with the conditions of how it should be professionally be done. The aspect of just coming without, or rather, those aspect of predatory aspect should not be there. So, in short, as we go about the new reformation of the policy, making appeal to the old one, obviously, even if there have been an aspect of court involvement where Section 15 is embedded with a percentage cost factor, what we're trying to see is now harmonization of all the loan system, meaning the credit basket in Zambia is going to create that strong capital formation in terms of trying to look at things in essence. And what we are going to see maybe as a final component is that we are going to consolidate a number of good elements around this. And, credit might be able to be seen as a burden in some other people, but it's an important aspect that need to be embedded within the financial inclusion, meaning there are companies that are running on the
Thank you, Mr. Tsanga.
Yes.
Those are building conversations which we'll continue to definitely be able to build on. John Mark.
Mr. Tsanga, it's been a pleasure having you. Thank you so much for coming through. And I know that these are conversations we'll continue speaking about. I believe that we should not just have Financial Literacy Week. Financial Literacy Week must be every single week. It's important to dive into such conversations because money is definitely